What's going on, ladies and gentlemen? Welcome back to the channel. I hope you guys are well. So it's been a mixed bag of price action lately in the market, and there's a lot of indecision at the moment. There's a lot of mixed signals going on with CPI today, Fed bullers saying more rate hikes, inflation. It's a lot going on. So in this video, we're gonna touch base on a couple of wave counts. We're gonna review the SPY, the Qs. We're gonna touch base on the IWN chart, the Russell. We're gonna take a look at the Dow, and we're gonna see where these mixed signals are coming from. I mean, is are we going to head on higher? I mean, yesterday we talked about the possibility of heading on higher, that the January 24th lows were all she wrote, but in fact, maybe it isn't. So uh yeah, tune in, let's find out. And before we dive into this analysis, don't forget to subscribe to the channel, give this video a thumbs up, and as always, hit that bell icon so you'll be notified when I upload the videos. So the SPY, which is the main source or main chart that we always take a look at here on trending waves, we're going to take a look at two wave counts, right? I haven't labeled this one, but this is the one we've been tracking for now in the group one here, which suggests that out of our January 24th low, okay, we still have three waves up, and then the makings of wave four. All right, yesterday when we got this gap up and then we sold off this morning, it was still the possibility that the wave four had anchored somewhere here in this triangle, right? The A, B, C, D, and E. But it sort of happened that we corrected further down. Now, I've relooked at it and revisited this wave count. And what I'm saying here now is that perhaps, right, we still have our confirmed three waves up, right? And now this became a larger triangle in the wave four. So this is down in A, up in B, down in C, D. We get D somewhere here, which we cannot go beyond the 457. I mean, obviously, if we do, then the wave five is ongoing, but we may find some rejection and then head on lower. Okay. Now, the case is that if this is the fact, then we will see the continuation to the upside to the wave one completed. So levels to watch for this count is to invalidate it is a break below the wave A, which is at 443.91. Otherwise, we may see three waves up to the D and then three waves down to the E before we break out. Now, if we start breaking below wave A, then the other chart that I'm looking at here, the other wave count, is a possibility of a truncated fifth in the wave one here at the intermediate degree. All right, so how would that work? That works by still calling this January 24th our low from the correction of November the 22nd of last year, 2021. Now we got our first one wave, ABC to the 2, all right, 3. This is 4, even though this fourth wave did go just slightly beyond the territory of wave 1, but it did not close above it. So what I'm calling here, guys, what I'm proposing is that we are holding this trend, all right, that was confirmed January 24th, retested on the 28th, and now back tested it again here on the 10th, as this is a truncated fifth. This is our first A wave down, all right, our B wave up. So then we get our push on lower. All right, guys, so I'm looking for downside support down towards the 38.2% retracement for this scenario, at which point we should be able to find support and then head on higher. All right, guys, so you see, little by little, we're starting to become a little bit more bullish, right? But when we take a look at the Qs, for instance, okay, this is where I want you guys to keep your attention to. When I have many of these counts here, I mean, I have three different options, and that's not good. That's not good because that's letting us know that there isn't really clarity just yet. And I know, I'm sure you guys can agree with it, right? We have been seeing a lot of mixed signals, as I mentioned at the beginning of the video, and it's just very, very difficult. So let's review our bear scenario first, okay? Only because if I take you up to the daily time frame, this one, for instance, tech or the Qs or the Nasdaq for that matter, right? If I turn on the moving averages, right, the 200-day period moving average, you can clearly see that we have not broken above the 200-day period moving average. So this is pretty bearish at the moment. Okay, we broke below it at the confirmation of this downtrend. We tried to stay above it, but then we failed to hold it, and then we broke below it on February the 3rd, consolidated right underneath it, gapped up, but acted as a freaking ceiling of resistance, and now we're rejecting it. All right, so that's a bit of a mixed signal right there. That's a bit of a concern. So let's take a look at the bearish count, suggesting that perhaps this is an ongoing correction, and the 200-day period moving average, which hasn't been tested since let's take a look here, June of when was this? or April, there you go, April of 20, excuse me, now is our resistance zone. Okay, so let's dive down to the 1 hour time frame and let's take a look at our wave structures here. So we're gonna look at the bearish count. So this bearish count is still suggesting that we made a third wave high, okay, and we are still on an ongoing fourth wave. So how would this play out? What does the wave count look like here? So out of November 22nd of 2021, we get our first A wave, our B wave, okay, and then 3 waves down to the W. We get 3 waves up to the X, all right, and now we are in the midst of making our first wave 1, wave 2 completed, and then 3, 4, and 5 to complete wave A. We get a 3-wave bounce to the wave B, and now we get our final sell-off in the wave C of wave Y, okay, thus confirming a 3-wave pullback, okay, to the wave Y. Now, in this case, we are looking for targets down to the $326.88 region for the Qs. Okay, now, again, this is all considering the fact that we are still underneath the 200-day period moving average. We have rejected the 50% retracement of the decline from November 22nd highs. Okay, and we're not looking anywhere impulsive out of the February the 3rd. Okay, and we're still having 3 waves up, and then this looks much more like a correction of this up. So again, mixed signals, right? So what we're gonna do here is that a confirmation at the break of 351 and then a confirmation at the break of 334 will certainly confirm the bearish scenario. Now, shutting this off, and let's take a look at our preferred count, which is a leading diagonal. In this instance, right, wave 4 has completed on January the 24th. This leading diagonal, ladies and gentlemen, is valid. That means that we are now in the makings of this wave 1, 2, 3, 4, 5. We upgrade this, or promote this rather, to the intermediate degree, and we have 1, 2, 3, 4, and we're going to be making a final fifth of wave 1. Now it's valid, right? We have overlap, we have 3 greater than 1, we have 4 greater than 2, and we're holding trendline support that originated back here on January the 28th. Now, if we start seeing a bounce tomorrow, okay, out of this low, again, if we start seeing a bounce out of this low tomorrow, which is 356 or today's low, and then we start breaking above the 366, and then ultimately the high of wave 3, then yes, this wave count is confirmed. So our invalidation levels come in here at a break below 337.95, and conservatively, so that's a conservative break, right, or the invalidation, and then a bearish confirmation will be at 334.37. All right, guys, so again, keep in mind that the Qs are a bit tricky to track at the moment. Now, the case here is that what if also this is a truncated fifth? All right, but a truncated fifth, not in the correction, sorry, in the move out of the January the 24th low, but rather a truncation of this decline. So instead of really thinking that this is an WXY corrective move, this is an A, a B, and a C. All right, where this C wave has a wave 1, 2, 3, 4, and a truncated fifth over here of C04, which is, again, it's not ideal, but it's pushing it. It's just not giving us much room to look at, ladies and gentlemen. It's not giving us much room to understand what the heck this pattern is unfolding like. So if this is the case, then we can say that this is 1, okay, out of the January 27th low. This is 1, A, B, C, pull back into the wave 2, or triangle into rather A, B, C, D, and E, right? And then we go into wave 3, okay? Where's this little fit? There you go. To get this wave 1. Don't mind this over here. So 1, 2, 3, 4, 5 to the wave 5 of wave 1. That's the best case scenario. All right. Well, actually the best case scenario is this leading diagonal. But our second best case scenario is this truncated fifth, considering that January 27th or 28th was our low of the truncated fifth. So you can start seeing here that there isn't clear evidence just yet. All right, we took a trade today on several names over at Trending Waves, anticipating the break, but you know, we have to keep patient, and we have to keep our eyes open, because a lot of things can change in a matter of minutes. All right, so I wanted to show you guys a couple more things. So if you've made it so far to this video, that's good, because we keep on seeing other evidence of a mixed bag in this market. So let's take a look at the futures markets, right? We're going to take a look at the Russell. All right, for now, we're going to look at the Russell. We're going to look at a couple of wave alternates for this name, and we're going to zoom out. We're going to look at the daily time frame. So obviously, the Russell has been one of the bearish, the small caps, has been super bearish one, right? Because we haven't even come clear or close to its 200-day or surpassing it, right? We broke below it. We're trading below the moving averages, the traditional moving averages, that being the 200, 150. All right, and so far it's not looking too good. So should we consider a bullish scenario? This is what it will look like. All right, I'm gonna shut these guys off. Should we consider a bullish scenario? A bullish scenario will look like this. So out of our COVID lows of March 2020, we get our first wave 1, pull back in 2, 3, 4, and we made our first wave 5 of wave 1 on November the 22nd, where everybody, all the other indices, November the 22nd ish. Actually, no, November the 9th, where everybody else started making their or nearing their tops, the short-term tops, right? Now, the way we're looking at this on a bullish case, right, is that this is an A, B, C. So the B wave or the wave 2 completed. So this is a retracement, right? This tool here is a retracement from the low to the high at a 38.2% retracement. Now, thus allowing us to start forming this trend channel. All right, this trend channel is the 2-1 to confirm the third. Now, again, this is the bullish case where we have evidence of 3 waves down. Now, where this becomes invalidated is when we go down to the 1 hour time frame. All right, when we go here to the 1 hour time frame, actually, yeah, on the 1 hour time frame. Let's take a look at the 1 hour time frame. So I'm adjusting this for us. So this becomes invalidated at the break of the wave A. Okay, now you can clearly see that this is resistance, right? You see here, right? This is resistance, resistance now. It was one support. Over here, let's go up to a 4 hour time frame. It was one support within this whole massive corrective move that originated out on January the 26th. You see, guys, once we see this correction that was holding these zones and then we broke below it, now it is likely and it's more clear that it will act as resistance. Now, if we continue on higher, then the bearish scenario is invalidated, and here is why. Okay, because if we have evidence of 1, 2, 3, 4, and 5, which means that this is an ongoing A wave, we get our B wave, right? Let me demote this to a minor degree, actually to a minute degree rather. Okay, so actually before I do that, let me backtrack and let me show you guys the daily time frame for this count. So the daily time frame for this count will suggest that we see further price action to the further downside. I'm gonna adjust this, though A wave is still ongoing. So price action could come down towards anywhere between the $1,600, $1,700, $1,706 region for the Russell. All right, because now that you know this, right, that we may have an ongoing A wave, let's take a look at where invalidation comes in and why. So going back down to the 1 hour time frame, okay, we're gonna see that if in fact this is still an ongoing A wave, then the subdivision should be divided into 5s, right? So 1, 2, 3, 4, and 5. So we're gonna demote this into a minute, and we're gonna do the following. So you can see here that if we break above this invalidation level, right, because of 4, if it closes above the territory of wave 1 and remains above the territory of wave 1, then we are invalidating an impulsive structure to the downside, which means that at that point we will have to go back to our bullish case, right, where wave 2 bottomed. Let me push this here. Excuse me. Oh, made a mistake. I'm sorry, guys. 1 second. Whatever. So the point is this, right? If we breach this low on our bearish count, okay, then this bearish count is invalidated. And then we will go back to our bullish candle, which will suggest that the wave 2 lows are in. All right, guys, another chart that is giving us a bit of a headache, or maybe not, right? Because let's take a look at the Dow. Let's take a look at the Dow here. So the Dow on our daily time frame has been a bit bullish, right? We have broken above. Let me shut these guys off here. We have broken above the 200-day period moving average, and we are holding it as support. Okay, unlike the Qs and unlike or the Nasdaq and the Russell, we're right below it. Also, we have the S&P futures market also breaking above its 200-day period moving average. So what that means to me is that, again, going back and forth, there is a mixed bag, right? You guys may agree with that. And so what we're going to look here is that on the 1 hour time frame, turning on our labels, right, we have come back up to the wave 1, down in 2, 3, 4, a clear 4, right, holding the support of wave 1, and now a 5th wave. Okay, so this one here is giving me a bit of guidance as to whether or not maybe this is a wave 5. I mean, look, this does look like a completed 5th, right, of wave 1. We did break this high, we broke now below it, and now we're perhaps making the A wave down, B wave up, and then C wave down to come towards the support of the $34,697 region for the Dow Jones. All right, if that's the case, and then we see positive momentum out of this low, or maybe this low, then chances are that everybody else will follow. Okay, guys? So another chart that is giving us a bit of a headache here is the 10-year Treasury yield chart, right? The bonds here is breaking out. They're breaking out to new all-time highs. Not all-time highs, but they're breaking out of their pre-COVID highs, right? And nearing the 2 point, actually we are already broken above the 2% mark, which hasn't been seen since COVID, pre-COVID. So, you know, that's what I'm saying. So there's a lot of mixed bag here. Maybe we see continuation to the third to a 2.45 or not. I don't know. We shall see. But evidence here is letting us know that perhaps that might be the case, right? We have our first 1, ABC to the 2, 3, ABC to the 4, 1, 2, 3, 4, and then final 5th of 5th to a 2.883. Okay. The alternate count to that will suggest that maybe this isn't an impulsive structure, but rather still in a corrective move. Oops. So this is the B wave. Okay. So what does that mean? The B wave went a little bit beyond the 1272. And do we see any type of divergence? We do see some type of divergence, right? We see RSI peaking here at the low, while making a new high. There is a lower high on the RSI. So while this may be a good news, right, this is still an alarming situation for tech stocks. All right. So hopefully this is the case to see a breather, right? We go down an A, B, C to the Y, but then after that, we are going to start shooting back up. So as always, thank you so much for your time. I hope this video was a little bit helpful, more clarity, or not more clarity, because we are still in gray waters here, but you see that where we stand. Okay, mixed bag out there. Do be careful. Stay sharp. Keep your eyes open. Join Trending Wiz. The link to our Discord group is pinned down in the comment section. Give this video a thumbs up. Subscribe to the channel, and thank you so much for your time. Take care. Bye bye.